Good afternoon, everyone, and welcome to our webinar, Investing in the UK Property Market Made Simple. I would first like to welcome our guest speakers, Jonathan Thompson from One Global and Darren Crocker from Holborn Assets. Jonathan is a manager at One Global and the property specialist for Southeast Asia, and he will be discussing the latest property trends and activity in the UK property market, and also how to identify the best investment properties. Our other guest speaker, Darren Crocker, who's our senior mortgage specialist at Holborn Assets. I know mortgages are not the sexiest topic to talk about, but it is a very important part when you're looking at leveraging your rental income to successfully pay off your mortgage. Darren will discuss all the mortgage options that's available for financing a property purchase. So the key topics we'll discuss is the best locations to invest in, the buying process, the entry-level requirements, and then mortgage options, full management and tenancy service, and then also leveraging rental income to pay off your mortgage. Can just please go on to the next slide. Okay, so just a bit about my company, Holborn Assets. Our company was established in 1998, and it grew drastically over the years. We've got offices in the UAE, in Dubai, Manchester in the UK, Hong Kong, Spain, South Africa. We've got an office in Joburg, Cape Town, Durban, also in Malaysia and KL, Cyprus and Vietnam. Myself, I'm based in the Thailand office in Bangkok. Can we just go to the next slide quickly? So just a quick introduction to myself. I'm a private wealth manager at Holborn Assets. I focus on key areas like wealth creation, which is savings plans, education planning, wealth management, retirement planning, and then also wealth protection, which includes trusts, life insurance, wills and testaments. Then we also focus on UK property investment and then citizenship, residency and immigration. I have a bachelor's degree in financial management. I'm also part of the Chartered Institute for Securities Investment and Wealth Management. I also have a background in contract law, criminal procedure and tax law. We go to the next slide quickly. So just to pass it over, Jonathan will now go through his presentation for you. If anyone has any questions, feel free to just ask in the Q&A. We'll answer that at the end of the session just to make sure that we've got a smooth flow on the presentation. Thank you, Jonathan. You can take over.
Yeah, thanks, Francois, for the introduction. And good afternoon, everyone from Hong Kong, and welcome to wherever you're joining us from. To give you a bit of background about One Global, we're headquartered in Singapore with a number of offices across the world, including Hong Kong, Dubai, South Africa, and the UK. We specialise in property investment with a particular focus on the UK property market. When you're doing your research into property, it's important to not only look at the company you're investing with, but also the developers and partners they work with. We work with some of the biggest and most reputable developers in the UK, including Barratt, Galliard, St Modwin and King's Crescent, to name a few. And of course, through our strategic partnerships, we'll guide you through every step of the investment process, from sourcing the property which best suits your requirements, to obtaining finance with the help of Darren, from IPFG, who'll discuss the mortgage options later on, and then Life Residential, who'll be able to secure a tenant for you, effectively making investment as streamlined and as hassle-free as possible. In terms of the UK property market activity, coming out of COVID, prices have continued to rise. Over the last month, increased at 0.3%. So even with stamp duty holiday coming to a close, there's a number of factors which have affected uptake in property prices. That's including the stamp duty incentive, people sitting on cash as their expenditures decreased during lockdown, and relocation, and most importantly, the lack of supply across the UK. And as it says on the screen, the hottest ever competition to buy with buyer demand. That's the double pre-pandemic levels. The good news for investors like yourself, the UK property market is expected to increase year on year, with this report taken from Savills Research Department, with the UK average just over 21% between 2021 and 2025, most notably the highest in Northwest Yorkshire, the East Midlands and the West Midlands, West Midlands growing at 24%. So why is this? As you can see from the chart, there's a fundamental economic problem of demand outstripping supply, and the UK is unable to match this demand for new housing. And this imbalance is the main factor in the UK property market projections. So as you can see in the top right-hand corner, homes needed over the next 10 per annum over the next 10 years, 300,000. And the average supply for the last 10 years per annum is 160,000. So we expect this imbalance to continue, and obviously that's going to positively, from an investment perspective, affect the price of property. So One Global, we have access to a number of completed, soon to be completed and off-plans developments across the UK, focusing on strategic investment locations, which have strong long-term fundamentals. So as you can see, we've got developments in from Manchester, Birmingham, and the Triangle in Ashford, and in London. So this just gives you an idea of our overall property portfolio and what we have access to. Most importantly, we're master agents to a number of developments in London. We've got access to over 15 developments, Manchester 2, and Birmingham 5, and Ashford 1. So the important thing is here, there's a range of completed projects to off-plan, and a number of price points means we'll be able to assist with most clients' requirements.
Okay, thank you, Jonathan. It's great that One Global has access to a number of developments differing in region, price point, and completion period. You guys can cater for all different kind of clients, depending on their requirements and situation, obviously. What would you say is the key investment picks from all those areas?
Yeah, my two picks would be probably, first of all, Birmingham. We've got a development, Digbeth 1 2, which is completed. And then we've got Ashford in Kent, where we have a great off-plan opportunity soon to be completed in Q1 2023. Both are very exciting opportunities. I'll go into more detail as to why we think these are strong investment plays. So first of all, Birmingham, one of my hot picks. Once a major force in the Industrial Revolution, the city is going through somewhat of a renaissance, with a lot of investment, regeneration and gentrification happening in the city. I'm going back to the Savills report, as I touched on earlier. The city is expected to grow at 24% over the next 5 years, with there being a number of factors driving the price growth. It's a massive city with a huge regional economy. It's got a strong student population of over 80,000, and there's a young and diverse skilled workforce. So the biggest infrastructure in a generation in the UK is currently being built, which will connect London to Birmingham and the rest of the UK, the high-speed railway system, HS2, which will arrive into Birmingham at the end of the decade. Currently, it takes about an hour and a half to go from Birmingham to London. When it's complete, it's going to half that, and it's going to be 45 minutes, which will make the city even more accessible. It's important to note that the London to Birmingham leg is the only section currently under construction, and the Birmingham to Manchester phase will not complete into the deep 2030s. So Birmingham will be the main benefactor to this for years to come.
Jonathan, thanks. I know you say it will be completed at the end of the decade, but can you just explain some of the current positive economic effects already happening due to the HS2?
Yeah, so yeah, that's correct, Francois. So one of the things also to note, what I didn't mention before, is the Birmingham to Leeds leg that's actually been put on the back burner just now. So that's, again, Birmingham's going to be another strong benefactor. It's not going to go further up north to Leeds. It will eventually go into Manchester. And yeah, I'll shortly come on to the sort of domino effect that's happening as a result of HS2, and as a result, Birmingham being a strong benefactor. So yeah, we're already seeing a migration of large multinational companies moving north in the wake of HS2, including HSBC's UK headquarters, Deutsche Bank, and most notably and recently, Goldman Sachs, all adding to the city's technology and banking and finance hub. These are a massive draw to the city, as putting up another peg, and is again going to be an attractive investment play. So as the old proverb goes, build it and they will come. So, and this is very much true of Birmingham. Birmingham's the largest draw of people moving out of London. And to note the infographic on the right-hand side, much of this population is young working professionals who are going to add to the ever-growing skilled population in Birmingham. So the infographic on the left is from 2019, and as HS2 comes further into play, that number is going to increase. And why we're looking so in depth into Birmingham is, and the makeup of the city is, that's going to be the target market for if you're looking to invest in the Birmingham market, that's who's going to rent it out, and eventually when you look to sell it on, there's a strong demand for property. So yeah, Birmingham has over 80,000 students in the city, with a large focus on business-related academia.
Okay, Jonathan, just a quick question. I can see that it's a big or a strong education hub. Do you see that there are many opportunities for post-graduation or young professionals after finishing university?
Yeah, good point, Francois. So in terms of, as the stat says, there's 80,000 students in Birmingham, and over 50% of them after they graduate are going to stay on in the city, which indicates two things. Firstly, it's a livable city and they enjoy living there. And secondly, and most importantly, there's job opportunities. Touching on the finance and banking hub of Birmingham, the Goldman Sachs MD and head of the new Birmingham office mentioned that when Goldman Sachs were doing their due diligence on a number of potential locations across Europe, they were drawn to the city's location and proximity to London, the European headquarters, its tech and creative clusters, and most importantly, its large, young and diverse talent pool. So again, there's a domino effect in this. Goldman Sachs are setting up partnerships and feeder courses with the universities in the cities, creating an incubator ecosystem.
Okay, thank you. That makes sense.
So yeah, with that, my investment pick for Birmingham would be Digbeth 1-2, which we're master agents of. As I said before, we work with some of the biggest and best and most bona fide developers in the UK, and the developers sit in Modwin, who are a FTSE 250 company. So yeah, there's this is in stage completion. The first stage is already complete, and there's a second stage in November, and the third stage is April of next year. With prices from £160,000, you exchange on 15%, which is around £24,000. So the entry level is very accessible to a lot of individuals. So yeah, as I touched on before, the price per square foot is very attractive in the comparables of the area at £367 for a one bed from £199,000. And we're expected rental yields of just shy of 5% gross. So the area itself, Digbeth is part of the city's master plan, and it's going for a lot of regeneration, although it's already a very, very desirable place to live. Digbeth's home to the Custard Factory. It's got a lot of bars and restaurant. And most notably, if you can see my cursor, we're here in Digbeth. And this here is a Smithfield master plan, which is a £2 billion regeneration of the old markets. This is going to be mixed use for retail, food and beverage, and commercial areas. I touched upon HS2, the high-speed railway system. That's within walking distance of Digbeth 1-2. And there's going to be a tram line as the start of next year, which will have direct access. You don't even need to walk to HS2. So the tram line going to HS2 and into the city centre where the bull ring is, where Selfridges is positioned. So yeah, as I said before, Digbeth is part of the vibrant creative quarter. It's a very hip and trendy and desirable place to live for tenants. So as I said before, my two picks would be Birmingham and Ashford. Ashford is located in Kent, known as the Garden of England. It's in the southeast of England. It's got a massive growing population, 22% over the last 15 years. So we're focusing a lot today on connectivity, because that's one of the key drivers for the economy and property market. So again, there's, as highlighted there, there's 10,000 new jobs created over the last 5 years. And as I'll go on to again, why they're moving there and why we're going to see even more jobs created and an increase of the population. So yeah, Ashford is extraordinarily connected. Connectivity is crucial in any property purchase, making sure the property is connected and access to transport link. And it doesn't get much better than Ashford. It's the only place in the UK outside of London which has direct access to Eurostar. So as you can see, you can go from Ashford to London in under 30 minutes and to Paris in 1 hour and 52 minutes. So yeah, 10 minutes from the property, and you're there. So direct access on your doorstep. This is very, very unique. So what's the fundamentals of Ashford's growing population? So as I said before, Ashford's population has grown over 25% over the last 15 years, and has added 10,000 new jobs. This is one of the reasons is because the employee cost is 28% lower than London, and they've got a good commercial hub. So you have access to London in under 30 minutes, but your cost per desk is substantially lower. So that's why a lot of companies are a substantial number of companies are moving there. So again, Ashford has Elwick Place and Ashford Designer Outlet, which attracts many shoppers from London. And there's also a number of food and beverage outlets in the town, which makes it an attractive place to live. So yeah, one of the biggest coups for Ashford was the announcement of the 250 million studio-led regeneration to Newton Works, which will be complete in 2023, which is aligned to the triangle, which will come on to discuss the property opportunity that I'll discuss in 2023. So they both match up nicely. Why are they located in Ashford? Well, this is because of the connectivity and cost of employment, so on and so forth.
Just a quick question. If you look at, for example, connectivity and the employment opportunities within the investment case, based on connectivity, how does this impact the rental market and the ability for finding renters for the property itself?
Yeah, exactly. So that's why we look at every investment cases from an intricate and in detail. Because if the economy is not growing and there's no job creation, then where's the market for your tenants? And eventually, when you look to sell your asset, you have to have that good, strong market. It's crucially important to understand the economy and what is driving it. So yeah, with huge job creation over the last 5 years, obviously those people need places to live, and which is good for the property market. If you look at the property prices over the last 5 years and you compare it to London, it's tripled. If you look at it from a value proposition, it's almost 40% cheaper than London property. 1, you're getting better value. 2, it's a better yield. And 3, you're going to see significantly greater growth. So yeah, our pick for Ashford would be the Triangle, aptly named the Triangle due to its the building's design in a triangle formation. Estimated completion is Q1 2023, as I said, and prices from just 185,000. This is going off plan. This is beneficial for someone looking to get into the property market just now, but don't have enough equity to yet complete the purchase. So you put down 20% upon exchange and the remaining upon completion in Q1 2023. So yeah, as I said, the market entry is 185,000. Estimated rental yield is just shy of 6% gross, and 20% down payment. Again, parking is included for all 2 and 3 beds units.
Jonathan, just a quick question. I think for most people, the biggest risk is always buying off plan. Can you just explain a bit about which developers you work with for people to understand the process better, because it is always a risk?
Yeah, so property investment, there's always risk associated with it. But as I said at the start, we do our due diligence on the partners we deal with, and investing in the right company and developer is important, and you have to trust both parties. The developers for the Triangle or King's Crescent, we've actually worked with them before on a master agency project in Birmingham called the Copperworks. We're more or less sold that out, and it's already complete. They're extremely professional and have a very strong real estate portfolio. King's Crescent have partnered with Homes England, a government body, for the development of the Triangle, which will give our clients massive reassurance going forward if they decide to invest in this particular opportunity. So yeah, looking at the aerial view of Ashford itself, we're here in the Triangle. You've got you've got Ashford International, just a 10-minute walk away, and you're over the footbridge to Elwick Place, the retail complex. Most importantly to note, looking from this bird's eye view, and especially with the UK coming in and out of lockdown, the need for space has increased, and as you can see, there's a lot of green area. So most notably, we're seeing tenants move from London in the search for larger apartments and access to open space. First of all, every apartment in the Triangle comes with a private terrace and is located just beside Victoria Park, which is here. Tenants have outdoor living with great accessibility to London at a fraction of the cost. And as I said before, the basis of this talk in our picks is all about connectivity and accessibility. First of all, it was Birmingham, accessibility into the city centre and connectivity on HS2. And with the Triangle in Ashford, it's accessibility into open space, good living environments, and connectivity to London. So you can get to London King's Cross in under 36 minutes, which is London's largest interchange stations, and access to Crossrail. And then Euston Station, where HS2 will come into play. So you can, theoretically speaking, you can go from the Triangle in Ashford into London and on to Birmingham when it's complete. So yeah, this is a couple of CGIs which will give you a bit of background and understanding of the Triangle itself. So yeah, you've got Victoria Park here. A lot of these units are south facing, and here you can see all the apartments have outdoor terracing, which is a massive draw for tenants, especially in the recent history of COVID. So yeah, it's a very, very good living environment. So these are just a couple of CGIs from the internals, plenty of open space, high spec furnishes and finishing. And yeah, so as I mentioned before, with prices from £185,000 from a 20% deposit on exchange, that's £37,000, and the remaining is upon completion. So yeah, this is a very good investment play, and we can share more information if this is of interest, or of if is of interest to you. So yeah, I'll pass you on to Darren now.
Thank you, Jonathan.
Thanks a lot.
Lots of information there. Lots of information. Hopefully, some questions that people are sort of asking themselves. I think on one thing that you mentioned, Francois, was how does the rental market get affected by people coming into these areas? I think one big thing we're seeing at the minute, especially in the UK, which is where I'm based, is supply and demand. So the UK needs to build a lot more properties in the UK, and unfortunately they're not building enough. So what happens is when big companies come into these areas like Birmingham, like Jonathan was mentioning, Birmingham and Ashford and all those areas, and they haven't got the properties for people to purchase. They will rent. So the rental market will always increase, which I think at the moment buying off plan is amazing, or even the completed ones, because these employers need to put their employees somewhere. So if the UK isn't building enough, then they will rent. So if as a customer trying to get in early, either on a completed development or off plan stage 1, stage 2, or stage 3, then you'll only see potentially your rental margins going up. And that's what I'm finding in the UK at the moment. That's where I'm based, which is always good. Right, so as Francois mentioned, mortgages aren't very sexy. So I just want to go through just some slides with everybody. And if you've got any questions, ask the questions now, or we'll leave it to the end of it. So we can move on to the next slide, please, Francois or Jonathan. So I'll give you a little bit of background information regarding IPFG. So we're a global based mortgage broker, solely based, literally just doing mortgages. So anything like Francois was mentioning, any investments or any protection, that always goes back to the wealth managers, but we are mortgage specialists. Myself, I've been in mortgages for 22 years, hence the grey beard. But yeah, so we've got the knowledge. We've got a broker in Malaysia, a broker in Portugal, broker in Dubai, and myself and 2 of my colleagues are based in the UK. So all of us got a lot of knowledge. So one of the things that Jonathan has mentioned on a couple of those slides were some of the new builds, you can have up to 75% loan to value. So that will determine on where you are based in the world, income, where the property is. So all those things take a big factor in whether you can get up to 75% loan to value. But we will do as much as we can to try and get the highest loan to value we can potentially get for you. Remortgages at the moment are a big factor. On a few of those slides, if you go back 5 years ago, the average interest rate for mortgages was about 5.5%, whereas the average, and a lot of clients at those particular time, because of the uncertainty, did 5-year deals. So as clients, if you've got any properties in the background in your portfolio where you need to think, actually, there could be a way of withdrawing equity from those, so leveraging those properties to allow you to buy some more, it's potentially, it's deemed, the mortgage lenders at the moment are deeming this year as being, and for the next 6 months being, the biggest amount of remortgage business they've had in 5 years. And that's because the interest rates now are, you can potentially get interest rates as low as 3% for an expat or foreign investors. So imagine some people would have done interest rates of 5.5%, suddenly the interest rate is going to be a lot lower. So if you've got any properties in your portfolio where you think actually it's a good time maybe just to have a look at them, quite happy to do that for you as well. But as you can see, the average interest rate at the moment is about 3.59, and again, some clients can actually get a lot less than that. But again, as a company, we will look at all the actual interest rates, the cheapest options for you, the best option moving forward on any development or even existing portfolios you've got.
Yeah, I think, Darren, that what makes this such an interesting investment option as well is if you compare the interest rates to some other countries like South Africa, for example, if you can get a low interest rate, and it's very easy then to cover your mortgage payments with your rental income that you generate on the property itself. Yeah.
So one thing that I'll always make sure I do, and I've done this for the last, especially for buy-to-let properties for the last 22 years, is I'll always make sure the advice I give to you will always be sort of cash positive. So you can do, the mortgage can be done in 2 ways. It can be done on a repayment mortgage, you're paying principal as well as interest, or you can do interest only. So a lot of investors will do interest only, but however you want the mortgage to be set up, I'll always make sure that when Jonathan or Francois tell me what type of rent you're going to achieve on that property, the mortgage that I give, with the mortgage you're able to get, will always make sure that, like Francois was making is making sure the rent's paying the mortgage off. So it's not going to cost you any, hopefully not going to cost you any money. And that's what I'll always make sure I can do. So on interest only, it really doesn't make a difference if you have it for 5 years, 10 years, 15 years, because the payments will be still the same. So I can't really do anything with that one. But actually on a repayment basis, so principal as well as interest, the length of the term of the mortgage will determine the payment. So if I'm being told the rental on these properties are going to be £750, £800 a month, then I'll make sure the term is giving you enough to cover the mortgage, or the rent enough to cover the mortgage payment plus a little bit more. Okay, so there's I want to give you guys a bit of information regarding why we try and do things early in the process. Now, when I say early, the earlier the better. I know it sounds a bit stupid. I'm dealing with the clients at the moment where they're buying properties that the development's not going to be completed for 2 years, and lots of people and the clients saying, well, surely that's far too early to even look at what I could get. But actually, I'll always say the earlier the better. Let's test the market. Let's see what is available now. Let's see what lenders are available and what the average or interest rate you're going to be able to get. And let's start the conversation backwards and forwards between myself and the clients. Because what we always find is it gives you, the client, the confidence knowing you can actually get the funding. What I'd hate to do, and I'll show you in a second why obviously if something goes wrong, but actually what we're trying to do is we'll get all the information sort of all lined up. So we'll know where you are, we'll know whether or not you need a UK bank account, we'll know whether or not you're going to do it for a limited company. We'll help with that process all the way so we can get everything ready. So 6 months before the completion, so when Jonathan says, look guys, these properties are completing, if they've not already completed, then 6 months before we can actually then start the full application process. But by which time you as a client would know, yes, you can get a mortgage in your name. Obviously every property is subject to valuation, and we'll help with that process as well. But it just basically means that we can start the process now, so we can get a mortgage in principle for you based on your circumstances, and then when you've ready to go, we'll have to do another check for you. So we will check to make sure when we're doing the full application, you're getting the best lender, the correct interest rate, because obviously things can change. So everyone's had the process with COVID for the last 2 years. So I've got clients where I've been dealing with them for 2.5 years, and their circumstances have completely changed. So the lender I got them agreed with previously isn't the best lender. So we'll always place them with the correct lender at the right time. So it also, one of the things we'll always do is check to make sure that lender has got funding on that development. So Jonathan was mentioning there's some properties that are already completed. One thing that we don't do is we'll give you false information. So we won't say to you, oh yeah, well, let's go with this lender or that lender because he's got the cheapest interest rate. We would have done our due diligence as well by actually making sure we've spoken to that lender and asked the question, have you got funding available on this development? Because what I don't want to do is start the process with one lender, they come back towards valuation and say, I'm really sorry, but we've got no funding on that development. Well, that could have taken 6 months. So we've got to go start again. So we'll always make sure that due diligence will actually ask the lender, make sure that your client's name or the client's name is actually on that development. So when they do come to do the valuation, there's no surprises. So it just makes things a little bit easier. I know I'm not going to rubbish what anybody else does, but that's something that we do. We'll make sure we do our due diligence. So you've got in the right interest rate. So that's the benefit. So one other thing that we can do, a lot of people won't realise this, but there's sometimes you get clients where I suppose their income, they know they've got the income coming in and they've got assets like pensions, investments, savings, shares, but they don't have any income every single month that they want to be able to prove. So this is probably for high net worth clients or retired individuals or self-employed. Self-employed is a big thing at the moment. Look, they reckon there's probably another 50% of people over the last 2 years that were potentially employed before COVID have suddenly gone self-employed. because that's the only way they can actually generate some income. So with clients, we've got lenders that do it up to 65%. It's really good if you obviously got portfolios. So it's provable assets. So again, shares, investments and savings. The interest rate isn't brilliant, but to be fair, there's literally only two lenders in the UK that will do asset-backed lending. And when I say not brilliant, sort of around about 5.5%. But when you do it on interest only, I think, Francois, you mentioned obviously in South Africa, I think sometimes the bond rates over there are like 10% sometimes.
Yes, it can be very high.
Yeah. So this is really good with sort of asset rich, but income poor, if you like, or don't want, as a self-employment client. So where they've got lots of portfolios, but we can do that for you as well. It's unusual. There's only a few lenders start coming and do this, but some big lenders are doing this now, which is really, really good, which is exciting as well. So I mentioned previously about leaving it too late. So the reason why I said when I say leaving it too late, I've got a client at the moment where I spoke to them about a year and a half ago, provided options, and now because that client now has decided not to do anything until the last minute, as in the property's going to be completing in 3 months, the added stress and strain on ourselves, the client, the developer, it all sort of comes in. So literally the client now is frustrated because nothing is moving quickly, because nothing ever does. So we've got no control over the process. So literally the case comes in, I've literally got to put it to the lender, push the lender all the time. And it's just causing issues. So it turns out now the client hasn't got a UK bank account, so that's going to take another couple of weeks. So the whole process just making things more and more difficult. This is why we need to be getting everything done initially. So it's all these little bits and pieces: bank accounts, employers' letters to prove income, bank statements, credit checks, all that type of stuff. We try and do initially, so then when it comes to the development, it should all move along smoothly, I should say. And that will put a smile on Jonathan's face. That's cool. Right. So I just wanted to go through the services that we offer. So it says silver, bronze, silver and gold. So what I'll always do is I'll contact, so if the client fills a fact finding, which gets sent out by Francois or one of the wealth managers to the client. The client fills in the paper, literally the document. It's 4 pages: name, address, telephone number, where you work, income, what your portfolio is, outgoings, and what you're looking to do. So I'll then spend around about an hour or so doing my research, speaking to lenders, checking affordability, filling all my bits and pieces in. So I'll then provide a link for the client, for you, the client, and we'll have a conversation between ourselves. That could be via Zoom, Teams, or WhatsApp, however you decide you want to do it. But then from that, I'll then send out a like an overview. So I'll tell you the property details, interest rates, monthly payments, fees, how long it takes for those mortgage offers to come out. So there'll always be potentially, well, there'll always be one, hopefully, but potentially there will be a few options for you. And then we'll have another conversation about which one you feel more suited for you, so the pros and cons, and we'll do that for free. So that's a completely free service we offer to you. So the research, the due diligence, everything else is completely free. If you then want to take it forward to actually get this mortgage in principle for you, so that's where I've transferred your details, your personal details, to that lender, and we will not do that until you've signed the terms of business with ourselves. So we engaged us as your broker, so covering you under the data protection or GDPR. So at that particular stage, yeah, there's a small fee to pay, £300. At the moment, we have to do sanction checks on everybody, so there will be additional £15 a person to do that. But so once you've paid that, we'll then transfer your personal details to the lender of your choice after we've done all the due diligence, and they'll come back normally within 2 or 3 days with that mortgage in principle. If there's any issues, again, if there's more than one option, we will come back to you and say, I'm really sorry, but this lender has said they won't lend because this, or this. but then we'll have other options for you. So this is where we do this 6 months prior to the completion. So we can do this. I'm doing this at the moment for clients not buy-in for another 2 years, or they're the completing's not for another 2 years. So it gives them the confidence knowing. We'll provide a receipt for your payment, so you can use that as part of your building up that business and all the information. You'll get a mortgage certificate, so you can put that in your file. Now the good news with this is a lot of people say, well, surely the mortgage in principle certificate or the lenders can only guarantee it for a certain period of time. Yeah, you do. It only guarantees for 90 days. But good news with foreign investors and expat mortgage lenders, it's a soft footprint. So every time they do it, it's not going to leave a mark on that credit file. So if you're a UK expat, it doesn't affect your credit score in any way, because only you, myself, and the lender can see it. So we can do as many times as you want. The fee of £300 is valid for 12 months. So, and after 12 months, if you come back and said, like Jonathan said, excuse me, the development's not ready for 2 years, I'll just make a mark on the file. It's not ready for 2 years. So that's fine. So I'll just transfer that £300 across to your on the file. So you only have to ever pay this once. Okay. The gold service. This is potentially where the property is going to complete it within 6 months. So again, leaving it a little bit late. Or you're in the process of, or I'm in the process of doing the full application for you. So we'll do the full application for you. There won't be any additional charge until the mortgage offer is issued. So lender has to check all your documents, valuation has to happen, and then mortgage offer is issued. And that's where, if you paid the £300 already for the silver service, you just pay the additional £450. If the property is going to complete within 6 months, so again, we've left it a little bit too late, then the full £750 will be paid instead of separating it out between the two fees. So we talked about remortgaging. Remortgaging at the moment it is, and refinancing it is the big thing at the moment. Obviously, there is going to be some pros. So you get access to the funds. Again, a lot of people, especially in the UK, are asset rich, and potentially, if you're an expat or a foreign investor, might not be enough income coming through. So that's a problem. Obviously, it's going to be tax-free cash. So if you're going to refinance, you don't need to pay tax on the additional funding. But it also means you can move your equity in one property to another property to build your portfolio. So obviously, the con to that would be your monthly payments are obviously going to increase because you're borrowing more money. But again, when it comes to you come to me and say, well, I've got this property, I don't know, for instance, in Ashford, but I want to buy another property in Ashford. Then what we can do is make sure the two rents cover the actual additional mortgage you're going to take and the new mortgage. So again, it shouldn't really cost any more money for you. Next one, Francois, please. So this just gives you an idea of the process. So this will always go out to Francois and the team, and every time I speak to a client. So it tells you the process. So what we do, you can see on the right hand side. I know it's quite small, but and then what you do. So lots of things we do. There's a few things you do, but I'll make sure you discuss all these all the way through the process. So back to you, Francois. Thank you.
Okay, great. Thanks a lot for all your time, Darren. I know it's a heavy topic, but it is very important. What in your experience, you know as well, people that, for example, that purchase a property worth £100,000. Technically, they only pay £30,000 for the property, and then they do the mortgage, and basically the renters pay off the rest of the property's mortgage payments and stuff. So at the end of the day, the property proposal with the mortgage is a very powerful leveraging tool. And especially clients, I know you've seen that a lot of times, where they purchase one property and after a few years do a remortgage on it, and then they end up buying 3 or 4 properties, which in a few years is basically 4 different streams of income to you.
Yeah, I'm dealing with one client at the moment where I was dealing with him in previous position, and I brought him across. And when I first dealt with him, he had his own residential property in the UK and 2 buy-to-lets, and at the moment he's got 15 buy-to-lets. Because every time we come to remortgage, the interest rate's been coming down, the property price has been going up, so we've just been maximising the equity you can take out of the property every single time to buy the next one and buy the next one and buy the next one. So it's definitely a lucrative business to get in.
If there's any questions, anyone can just click on the Q&A button or on the chat function if anyone should have any questions. I think that was very comprehensive. Just want to check. Darren and Jonathan, can you guys see any questions in the Q&A if they pop up?
No, I can't see anything.
Okay. I'm keeping an eye on it if anything comes through. Doesn't seem like we have any questions at the moment. We'll email out a follow-up after the presentation. So for future reference, if anyone's got any questions or queries on anything, you can just reach us on that email that will be sent out. And we'd just like to thank you again, Darren and Jonathan, for both of your time, because it's difficult with everyone's different time zones. You're in the UK, I'm in Bangkok, Jonathan's in Hong Kong. So I really appreciate all your time and putting this together for us.
No, thank you for letting me join.
Most welcome. Thanks a lot, Jonathan.
Thank you.
Cool. I think we can sign off. Cheers.